Good evening and welcome. We're coming to you with breaking news tonight as the U.S. stock market surges to unprecedented new highs, a rally that has captivated Wall Street and is echoing across the nation. The Dow Jones Industrial Average, the S&P 500, and the Nasdaq Composite have all shattered previous records in a stunning display of market strength to kick off 2025. Right now, you're looking at live images from the New York Stock Exchange, where the closing bell just moments ago marked the end of another historic trading session. The mood is electric. Seasoned traders and market analysts alike are buzzing with a level of optimism we haven't seen in years. The charts tell a powerful story, a steep upward climb with major indices gaining significant ground day after day. The S&P 500, a broad measure of the market, has crossed a major psychological milestone, pushed higher by relentless investor demand. The tech-heavy Nasdaq, of course, is leading the charge, fueled by a phenomenon that is reshaping our world, the artificial intelligence boom. This isn't just a minor uptick. Analysts are calling it a fundamental repricing of our economic future, a new chapter in American innovation. So, what is the engine behind this remarkable rally? In a word, AI. The artificial intelligence sector is not just a part of this story. It is the headline. We're seeing a tidal wave of investment pouring into companies at the forefront of AI development. These aren't just the tech giants you know. It's a whole ecosystem, from nimble startups to established players, all racing to innovate. The demand for artificial intelligence has exploded across every conceivable industry. Businesses are adopting AI to streamline their operations, enhance productivity, and create entirely new products and services that were the stuff of science fiction just a decade ago. Think of advanced AI systems managing complex supply chains, powering breakthroughs in medical diagnostics, and personalizing customer experiences in ways we're only beginning to understand. This demand has created a voracious appetite for the building blocks of AI, powerful semiconductor chips. The companies that design and manufacture these sophisticated chips are seeing their valuations skyrocket. You're looking now at visuals of a state-of-the-art data center, the digital factories of the 21st century. These massive facilities, filled with rows upon rows of powerful servers, are essential to training and running the complex AI models that are driving this revolution. The sheer scale of construction and investment in this infrastructure is staggering. We are witnessing a fundamental build-out of a new technological backbone for the global economy, and it's happening right here, driven by American companies. This technological arms race is fueling intense competition and innovation, pushing the boundaries of what's possible, and in turn, pushing the stock market to new heights. But what does a soaring stock market, fueled by high-tech AI, mean for the average American family? The effects are more widespread than you might think. For the millions of Americans with retirement accounts like a 401k or an IRA, this market rally translates directly into a healthier nest egg. Many of these funds are heavily invested in the very companies leading this charge, meaning the growth you see on Wall Street is also boosting the retirement savings for teachers, firefighters, and office workers across the country. However, the impact isn't just felt through investment portfolios. The AI boom is creating a new landscape for jobs and wages. We're seeing a surge in demand for workers with skills in data science, machine learning, and AI development, often commanding high salaries. At the same time, there's a growing national conversation about how AI will reshape other professions. For small businesses, the proliferation of accessible AI tools offers a chance to compete on a larger scale. A local bakery, for example, can now use AI to manage inventory and predict daily demand, while a small online retailer can use it to personalize marketing and improve customer service, leveling the playing field in unprecedented ways. On the other hand, there are valid concerns about job displacement and the need for workforce retraining. The efficiency gains brought by AI could automate tasks previously done by humans, creating a critical need for education and skills development programs to prepare workers for the jobs of the future. The economic ripples extend to consumer costs as well. While AI-driven efficiency could lower prices for some goods and services, the immense investment required could also have inflationary pressures. It's a complex, evolving picture with both clear opportunities and significant challenges for everyday Americans. This dual nature of technological progress is at the heart of the current economic debate. Of course, with such a rapid and historic ascent, a healthy dose of caution is warranted. Professional investors and economists are pointing to several potential risks that could cloud this sunny outlook. The first and most talked about is valuation. Are the stock prices of these high-flying AI companies justified by their current earnings? Or are we in a bubble inflated by hype? The so-called price-to-earnings ratios for many leading tech stocks are at levels far above historical averages, leading some analysts to warn that the market might be priced for perfection, leaving little room for error. A single disappointing earnings report or a sign of slowing growth could trigger a sharp correction. Beyond valuations, there are macroeconomic concerns. The massive capital investment required to build out AI infrastructure, from data centers to semiconductor fabs, is often financed by debt. Rising corporate debt levels could become a significant vulnerability if interest rates were to climb or if the promised returns from these AI investments take longer than expected to materialize. Another critical risk factor is the staggering energy consumption of AI. Data centers are incredibly power-hungry, and the exponential growth of AI is putting an unprecedented strain on our electrical grids. This raises serious questions about environmental sustainability and whether our energy infrastructure can keep pace with demand. A bottleneck in energy supply could become a major roadblock for the entire sector. Finally, the global supply chain remains a point of fragility. The world's most advanced semiconductor chips are produced in only a handful of locations, making the supply chain vulnerable to geopolitical tensions or natural disasters. Any disruption to this delicate chain could have immediate and severe consequences for the entire tech industry and the market rally it supports. These risks don't necessarily mean the boom will end tomorrow, but they represent significant headwinds that investors and policymakers are watching with extreme care. This is a moment of great opportunity, but it is one that is accompanied by equally great challenges that must be navigated with wisdom and foresight. Thank you for watching.